Hello traders, you are welcome back to the Forex Geek channel, and in this particular video we are going to be exploring one of the most talked about strategies in trading, which is buy the rumor, sell the news. All right, this is what we're going to be discussing in this particular video. Now, if you've ever wondered why markets sometimes move before an announcement and then behave differently after, this video will explain it all. The buy the rumor, sell the news strategy is a trading approach where traders anticipate market movements based on rumors, expectations, or forecasts before an official news release. So the idea is that traders position themselves in advance of expected events, and once the news is confirmed, the market often reacts differently, sometimes reversing direction. Now, you might be wondering why it happens. Yeah, markets move ahead of news because traders try to get in early, anticipating the outcome. Now, when the news is finally released, the reaction may already be priced in. Okay? That's why markets can often drop after positive announcements or rise after negative ones. Understanding this behavior is key to using this strategy effectively. All right. So, like Investopedia says here, news traders capitalize on the effect of breaking news and economic reports on market sentiment. They aim to profit by reacting swiftly to revised stock and bond prices before and after key announcements. Whether it's a scheduled earning release or a surprise event, news traders exploit market volatility for swift gains. Okay, so now how do you identify rumors versus news? Spotting rumors is a crucial part of this strategy. It's a critical part of this strategy. You need to keep an eye on early analyst reports or forecasts, social media chatter around major events. You also need to pay attention to market sentiment indicators, and all of that. So once news is official, the true market reaction can be different than expected, which is why traders sell the news after positioning during the rumor stage. Okay? Now, as a trader, you need to also know some practical tips. Okay, and one of these tips is to track economic calendars and news events. Okay, it's important that you do that. And then also need to observe market reactions in real time before news releases. Combine this strategy with technical analysis to confirm your entries and your exits. Okay? Then it's very important to use demo accounts first to practice interpreting rumors and news reactions safely. All right? Now, as for common mistakes to avoid, trading without verifying sources is one of the mistakes, because rumors can be misleading. And also, do not make the mistake of ignoring market context. Other factors can influence price action, all right? And then also, do not over leverage during high volatility periods. You need to always manage your risk. All right. So now you can see that this is actually one of the strategies for buying the rumor and selling the news. You know what happened in mid 2020 with Apple, right? You can see Apple announced that it was going to do a stock split, and stock splits increased the number of shares outstanding but reduce the stock price, right? So stock splits are typically reviewed favorably since the reduced price tends to draw in more investors and increase volume, even though nothing has fundamentally changed in the company. So the price of Apple stock rose more than 40% in the month, leading up to 31st August 2020, the day of the stock split, right? Analysts and traders were buzzing about how the split would help fuel the price higher. And as investors piled in, by the time the stock split happened, everyone who wanted to own it was on board. Over the 3 weeks following the split, the stock fell more than 20%. Right, so you can see that this is one of the examples, right? You can see no one here trading in the Forex market. When fears of the COVID-19 pandemic began to surface in February 2020, there was a financial shock. I mean, yet traders still bought the rumor and sold the news. They assumed that the pandemic would be a global problem. So they bought safe haven currencies like the Japanese yen and the Swiss franc. So the USD CHF tumbled as fears mounted about coronavirus, and traders bought the CHF and sold USD. So while the impact of COVID-19 lasted a long time, the rumor didn't. The USD CHF, you can see the chart here, right? You can see the USD CHF fell for only 2 weeks. As more data was released about the severity of the virus, the price completely recovered the decline. So traders who were trading the news bought the rumor by buying the CHF and then sold it right back as more news came out. So you can see here, traders buy CHF, which is a safe haven currency, while selling USD, right? As rumors of COVID-19 spread. Then here, as news is confirmed, traders sell CHF. So you can see that these are just two examples, of this concept of buy the rumor, sell the news. So by understanding and applying the buy the rumor, sell the news strategy, you can better anticipate market movements and understand the psychology behind price reactions. All right, so this is a strategy that requires patience, observation, and practice. Okay, now if this video helped you understand buy the rumor, sell the news, make sure to like this video, subscribe to the channel, and click the notification bell for more trading strategies, tutorials, and market insights. Stay informed and trade smarter. See you in the next video.